Yeah, residential's healthy. So I think as long as the government keeps paying everybody, that bonus premium that's supposed to expire in July. So as long as that continues, if we don't get unemployment back and stabilized, so that's what's kind of kept it alive was, a little bit of the stimulus, and then the big bonus is that unemployment. A lot of people are making more money on unemployment than they were working. So that's great. That's been a really good thing because they've been able to keep spending, keep paying their rent, that kind of stuff. So as long as that continues, we're going to be okay. People need a roof over their head. So no matter what happens, especially in this environment, they're doing the math in their head. And they're saying, wait a minute now, if we don't pay our rent, we don't do this, we got to move. That's going to cost us money. That's going to be a deposit. So it doesn't make sense for people to not pay and try to move. So it's more logical for most people, if they can, to stay in place, pay their rent. They need that roof over their head. So housing is a great space to be, whether it's multifamily, whether it's mobile home parks, whether it's single family rentals. Okay. People need that. Or if you're, buying and selling, most real estate markets for housing is very strong right now. Low inventory, a lot of home buyers out there, low interest rates. So it's, the real estate market's red hot in the single family home for purchase market, as well as the for rent market. Nicer single family homes for rent is a very hot, in demand product in a lot of areas, executive rental housing for people that just don't want to own for whatever reason. Mobile home parks are doing really well. Those are great assets. You can still get some really good loans on mobile home parks. There's a lot of good debt out there for those. Self-storage has done well. Now, the problem in self-storage right now is they haven't been able to hold auctions. So if they've got non-performing units, they can't get in there and clear them out and turn them over because nobody's moving in or out right now with all of the restrictions. But as we open back up, that should work itself out. But they've done well, and they did well historically back in 2009 as well, which is interesting. But that is one thing that could, if it got really, really bad, people will start selling their possessions and get rid of that storage unit, but it would have to get really bad. So I think for a while, the way things are looking, as long as the government is still there helping the unemployed, we're going to be fine. And that market is going to continue to hold. Like I said, I don't plan to see a lot of upside in rents in place, but there could be some potential upside as we move through this and people start to move again and get out and do things where turning units over, you can institute your rent increase program. Well, it depends on which market you're in. If you're in a seasonal market this fall, after this summer, like the market I came from, there's going to be a lot of sellers. There'll be a lot of people wanting to dump those properties that this season was enough for them that they're like, you know what, I'm out. Because a lot of those don't make a lot of money. They break even at best, which is great. For a lot of people, those are a principal pay down, business plan versus, cash flow. In other markets where you have more of a year-round short-term rental, those are a little bit more profitable. So most people are going to break even. They're not really losing. They're more or less going to break even, on the overall year, if you look at it. Now, they may not have had the reserves and weren't planning on it, but if they look at the house over the year, they'll probably break even. So I would say right now going into the summer, everybody's going to collect that rent. They're going to hold on to those properties. And if they're going to sell, it's going to be this fall and winter, especially in the seasonal markets. So that might be a good opportunity there to pick some stuff up. And that's the other side of the coin too. So when you're doing real estate, you're investing in real estate, if you're not getting interest only loans, which most people were here recently to make these deals work with the cap rates, that we were seeing. But if you're paying principal down, that's the other business plan too that you've got to look at, is that principal reduction. So if you're going 10 years out to 15 years out on some of these acquisition and portfolio aggregation strategies, you're getting a lot of principal reduction in there that can be part of your business plan now to help boost those returns. So